Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. Well, these are the top headlines that we're tracking at this hour. Markets are inching very closer. In fact, Nifty is inching very closer to its all-time high level of 11,171, and cement stocks lead the gains in trade. ACC reports its biggest intraday gain in 9 years after a strong second quarter performance. L&T Technology Services gains the most in 6 months after it saw margins expand by almost 500 basis points in its first quarter. And Asian Paints will be reporting its first quarter earnings today. Impact of high input cost will be watched.
Also on the show today, lots more lined up. Let's tell you the big voices. We decode UPL-Arysta deal and the aftermath of that with Jai Shroff. Also decode the first quarter performance of Tejas Networks with Sanjay Nayak. Talk about market technicals with Amar Singh of Angel Broking as well as Sacchitanand Uttekar of Trade Bulls. And Gurmeet Chadha of Complete Circle Consultants with Nipun Mehta will be talking about the fundamentals on the show. However, the markets, and as we said, the Nifty about 30-odd points away from all-time highs. Sensex already nudged that levels twice in the last 2 days, and we're trading close to the day's high. So a bit of a pullback after that initial dip that we've seen about an hour and a half ago. The broader markets too doing reasonably okay. The Nifty Bank isn't, but if you just look at the mid-caps and the small-cap end of the market, some strong gains out there. This morning we spoke about how the mid-caps and the small-caps might be near levels wherein there could be a pullback, a possible pullback. And we're starting to see signs of that over the last few days. The broader markets seem reasonably excited. Just get the heat map up on the screen before I talk about the before I hand it over to Navneet for what's happening in the futures and options space. The Bajaj Twins marginally lower, Kotak Bank marginally lower, but no big casualties in the session today. And on the gaining side, I think cement related names, all of them doing very well. Ultratech Cement about 3.5% higher, Grasim about 8%. Commodities by and large led by Vedanta and Hindalco continuing their merry ways. So yesterday about a 3-4% gain, today another 4% gain for Vedanta. Indiabulls Housing Finance is doing well, and L&T in the results week is up about 3% in trade. After a really long time, I'm seeing Eicher Motors be in the top gainers list, up about 3% in the session today. So good going for that. And Z is packed in some punch, about 2.5%. A lot of result reactions, to be honest, at the mid-cap and the small-cap end of the market as well. And I'm sure we'll talk about all of that and the futures and options pockets. Just one or two trends that I want to highlight. Firstly, companies like ACC, Tejas, L&T Tech, all of which reacting to the results and all of them doing very well and staying well for most part of the trading day, which is actually a really important thing. But that's not all. Excuse me. There's some other movers, and led by ACC, I think the cement stocks have done really well for themselves. All of them having some strong gains on fairly strong volumes. Navneet, what are you spotting?
The Qs are looking really positive. In fact, Nifty is now at 11,140. Remember, we're watching out for that all-time high level of 11,171.5. On Nifty, that's the all-time high which we hit on January 29, 2018. So watch out for that mark, 0.5% higher. Pull up the Nifty futures. The rollovers will tell you what sort of positions are being rolled over for the August series. So 4% higher in terms of July futures, which trade with a premium of almost 7 points right now. And that's a rollover plate for you. 30%. So from yesterday, we've seen some bit of uptick. As you can see, the open interest for August series is also inching higher. The Bank Nifty, however, today has been a little bit volatile. It also slipped into the red, but right now it's just about trading in a flat territory. 27,000 has been maintained, though it was breached during the session. 64 points premium for July series. Rollovers have picked up for Bank Nifty compared to yesterday. That stands at about 25% right now. But lots happening actually on the option side. One worrying sign could be because the PCR is inching higher on back of heavy put writing that has come in since yesterday. Yesterday's closing was somewhere about 1.80, so it is heading to that overbought territory. But today also, if you see, there's a lot of put writing which has come in. So 11,100 strike, that's added the maximum open interest as we speak. Almost 19 lakh shares have been added there, whereas on the call side, the writers have been running for cover as and when the market is inching higher. So 11,000, 11,050, all these strikes in today's trade trade have seen some bit of unwinding. So now the maximum open interest is at the 11,000 put and the 11,200 call. Watch out for this range at least till the expiry date. Neeraj has already spoken about the cement pack, but the day clearly belongs to them. Remember, in the last 6 months, the cement counters were reeling under pressure in terms of prices. Today, the stock prices have moved higher. So ACC being one of them, earnings beat estimates, fresh long positions seen. On the cash side, we've seen high volume. So definitely watch out for delivery data, not for ACC, but for also cement stocks in today's session. Pyramid Enterprises has been trading in the positive territory. Interestingly, there's a lot of open interest increase that I've observed in Pyramid Enterprises in today's trade. Long positions have been built up for the July series, and also, as you can see on the screen, for the August series too, the open interest has been inching higher. So fresh long positions being built up for Pyramid, which trades with gains of 4.5%.
Okay, but I'm told that UPL is with us. Darshan?
Yeah, so basically the big deal that happened, and UPL will be acquiring agri-pesticide maker Arysta Life. They've already done the acquisition, $4.2 billion. It will be closed in the next few quarters. It's an all-cash deal that will create the world's largest agrochemical company. Now, we'll have Jai Shroff with us to discuss the entire deal. Good afternoon, Jai. Thank you so much for joining us on today's discussion to discuss how this has gone through. We know the contours of the deal, but let's get some concerns out of the way which the market has. Firstly, it's a huge debt that you're bringing on your books. It's a $3 billion debt that you've taken for this. Was this the right move of going in for such a high leveraged buyout?
First of all, excuse me, I've lost my voice, but I'll try my best to make sure you can hear me. Yeah, I think that, the deal, actually we have a very low gearing on the deal. The leverage will start off at 3.5 times. But within a year, we will deleverage the company to about 2 to 2.5 times leverage. We have got extremely good financing terms on the deal. We have been able to secure funding for the deal from our banks on a 5-year term loan basis for about less than 4%. This is extremely good terms. Our interest burden on the debt will be no more than $120 million. The EBITDA of the business is expected to be $1 billion plus on a pro forma basis. Going forward, UPL and Arysta are both poised for growth. UPL has consistently been growing more than 10% a year for the last 10 years, 10-15%. We believe our earnings growth and the cost optimization which we will bring will make this deal extremely cash generating, and that will help us to reduce any leverage. But in any case, we believe that the amount of leverage we're taking is within a controlled amount. I mean, very much under our control.
Okay, Jai, by when do you expect to repay off the entire debt of this buyout that you've taken?
So the term loan is for a period of 5 years and a bullet payment after 5 years. UPL, as you know, generates quite a lot of cash, and together the company will be, more than $1 billion of EBITDA. I believe that much earlier than 5 years, maybe 3.5 years, we will be able to repay generate enough cash to repay the debt.
Okay. The other fact is the equity that gets in, because TPG and ADIA, they will put money into your wholly owned subsidiary, that is UPL Corp. How is this structured? Can you give us more details of this? How this is structured?
So both ADIA and TPG are putting in equity, about 1.2 billion into our wholly owned subsidiary Mauritius based, which is acquiring Arysta. They are just coming in as equity partners. They believe in the story. We believe that this will make us the premier post-patent company in the world, and food security concerns around the world are there, and this is a very hot space. People are very interested in being in the food space, and this will make us a world leader, and I think they want to be part of that.
What's the structure now of with Adya and TPG coming in? What's the structure of UPL Corp? How much % do you own? What was it earlier, and how will the shareholding change now?
So UPL Corp is 100% subsidiary of UPL India, and with the 1.2 billion equity infusion, we will get they will get about 22% stake in the company.
Okay, they'll get a 22% stake. Usually, you've had a fantastic track record, Jai. That credit we have to give you, because of the spate of acquisitions that you've done, you managed to turn around. But the thing is, they were smaller acquisitions, $200–300 million, done at an EV to EBITDA of 6 times. This is a fairly large acquisition. It's a $4 billion acquisition. And the EV to EBITDA is also much higher, almost 9 to 10 times here. What made you change your strategy from, going in from getting companies at your terms to, getting in such a large asset for UPL? So,
we've done more than 50 acquisitions over the last 25 years, small and big ones. We run our business in 130 countries. We are a truly global company out of India. We understand managing integration very well. The amount we are paying for the company is about 9.5 times. But with our synergies, we are expecting optimization, business optimization, to bring out about 200 million. We're not even talking about sales synergies. Both the business are very complementary. We have a completely complementary product range. Our markets where they are strong, we are not so strong. Where we are strong, they are not so strong. So if you just look at a market like Brazil, UPL is very strong on row crops, soybean, corn, cotton, while Arysta is very strong on vegetables, fruits. This is completely complementary. If you look at East Europe, Africa, you look at India, there's complete complementary. UPL is strong in India, Arysta has no presence. They have a fantastic portfolio. Africa, UPL has a small presence there. They are a market leader. East Europe, all these are completely complementary markets, and will give us tremendous sales growth. We have a portfolio of products to launch through their channels, and vice versa. So we believe the sales synergies will be in excess of the number. So if you add 200 million of optimization and at least 200 million of sales synergies, we're talking about a number which is much lower than even the past acquisitions we've done. We believe that this will be one of the best deals we've done, and we are very excited, and so are our partners, Adya and TPG. This is a compelling transaction which we have been looking for quite a few years. We've been in discussions on and off for more than a year now, and we looked at it even in 2007 when Permira bought it, and so we are very familiar with this asset. And we believe that it's completely complementary.
Okay, Jai, the reason I was asking for such a large acquisition is that history shows that leverage acquisitions or leverage buyouts don't always work the way when it is happening, and history shows it. Obviously, there will be some. So that's the concern that Street has, that how will UPL be able to turn out such an acquisition? And if you notice how your share price fell almost 40% when the news started coming in that you are going in for such a large acquisition. So a word on why the Street is concerned. Any word on why you believe that this can be easily turned around by you?
So I think that I think the market did not know, and we couldn't announce the details of the transaction prior to closing. Now that we have closed it, we announced it, and the market reacted very positively. All the three investment the rating agencies have given us a positive view. They are looking at this asset, this acquisition. They maintain our investment grade rating. I think it's not a leverage, irresponsible leverage. We are at 3 times, which is very manageable. our funding is at less than 4%. I think that even if you go to the bond market today, even sovereign company in India may not be able to raise money at less than 4%. So I think we are very, very comfortable. The deal, the financial structure is done very conservatively. There's going to be no pressure on in the short term for the company. We can focus on capturing the cost optimization and the sales synergies, and we believe that this is going to be a great opportunity for transformational deal for us. And we are very familiar with working in cross cultures. UPL is probably the most global company out of India. We understand that very well. So I don't see there to be much risk on leverage. We have, our financial terms, I think market did not expect such favorable financing which we have been able to get. So there was nervousness prior to understanding the deal. Now, since the deal is announced and people have understood, all the analysts have covered it as a very positive deal. So we've looked at all the reports and everybody is very excited about this for us.
Hi Jay, this is Navneet. Well, clearly I think the analyst concern has been leveraging the balance sheet, but my first question to you would be on the synergies that you've highlighted. You've said in the first year it could be $100 to $120 million. In the second year it could be around $200 million, and also the EBITDA contribution of $400 million which you've highlighted. Could you tell us the numbers that you've given? What's the key risk that one can see to these numbers then?
We are quite comfortable with the numbers which we have given. We have had our consultants look at the numbers. Our partners, DPG also re-looked at the numbers. We toned down the numbers quite a bit. So whatever numbers of 200 million of optimization and sales synergy of 200 million, we are very comfortable with these numbers. These are extremely conservative numbers, and we don't see any downside in achieving these. Obviously, we are in an agriculture business, and markets fluctuate, and commodity prices move up and down. But we believe that the whole trend is positive, and we believe that the timing for this deal is extremely good. Arysta on its own has just finished an integration of 3 companies which they acquired 3 years ago, and the platform is the whole platform is perfect for us to digest this transaction.
Are you suggesting that you've been conservative with these synergy numbers and the EBITDA numbers? Can one even expect higher numbers going into FY20 then?
See, UPL has been the fastest growing company in our industry globally for the last 10 years. We have almost every 4.5 years we have doubled our business. We are a growth oriented company. These projections don't even consider growth of UPL or Arysta. So we in addition to what we're talking about, UPL organically is also positioned to continue to grow. Arysta also is positioned to grow. And so when you look at that, we have been very, very conservative with the numbers.
Okay, Jay, if you look at Arysta's financial, they haven't been the most impressive because they have had a CAGR of in a single-digit CAGR for the past so many years. What are you going to do different that the numbers will start flowing in for Arysta? So I want your roadmap for Arysta, basically.
So if you just look at the portfolio of Arysta, I think they have an amazing portfolio of a whole biological solutions, seed treatment technology. They have a portfolio of products which they have niche products which they have really focused on specialty crops. UPL's core competence is in row crops, field crops, and we have extremely good relationships in different markets. Launching those products through our network will just give us a boost in growth. So we are very, very comfortable with our ability to scale up volumes through our channels, existing relationships, which we have today in and which has enabled UPL to be the fastest growing company in the industry. So, and even we are getting many inbounds from all our customers and saying they're so excited about this deal we've done because they believe that it's going to help them as well as UPL to continue to grow.
Jay, I'm just revisiting Darshan's question here. We spoke about 22% stake which TPG and ADIA will hold in your subsidiary. Will their role be restricted to being equity investors, or are they going to get any board seat?
They will have some board seats in UPL Corp. They will have 2 board seats. So they will be there, and we are very pleased to have them on the board. Both of them are very experienced investors, and I'm sure we'll learn a lot from them.
So this doesn't change the shareholding pattern of the listed entity, UPL Limited, right? So any kind of equity infusion,
absolutely nothing.
So that will stay. Are you looking to increase stake because your promoter shareholding in UPL is pretty low? Are you looking at upping your stake by any chance in your own company?
So we've the family is we are constantly evaluating that. And we have been increasing our stake now and then, and we've been doing buybacks. So that's always on the table, and we will probably do that.
Okay. And my final question before we end, not to do with Arysta, but generally in terms of the currency movement that we've seen in the Latin American market, you have a sizable presence there. Are you concerned with the way things are moving there? Are you seeing any kind of concern with what's happening there?
So, I mean, in our business in the last 25 years, we've learned to manage these currency risks, because when you're doing global business, currency risk is a major challenge. We run a dollarized balance sheet, and we manage the risks very, very conservatively. So, also when there is particularly a devaluation, farmers and exporters from the country benefit. So if you look at Brazil or you look at Argentina, they are primary agriculture food exporters to India, China, rest of the world. So our customers generally benefit tremendously when there is a devaluation in the currency. It makes them more competitive, and so it really helps their balance sheet and helps us also. But generally speaking, UPL manages a very conservative balance sheet in terms of risk management, and we do not take any open exposures. All our exposures are hedged.
Okay, Jay, we leave it at that. Thank you so much for joining us on this interview. Congratulations on finally completing the deal, and hope to connect with you after your first quarter numbers come out very soon.
Thank you very much.
Thank you. So Neeraj, that was the management of UPL. They seem pretty confident. The street had worries about the debt situation. The management has addressed that the interest rates that they're paying on the loan is pretty low. You've seen that UPL has bounced back significantly from the lows that we've seen, but time will tell whether they will be able to turn it around or no. But as of now,
one thing he mentioned about upping the stake promoters in the company, I was just checking the data and insider trades. Actually, a couple of the promoter entities, they have been picking up a meager amount from the open market in the last few months.
The promoter shareholding is pretty low.
Yeah, it's pretty low. It's around 27, 28. Yeah.
But the synergies, I was going through the reports. The synergy benefits clearly happen to them because from being a generic player, they become a specialized player. It's a leap of risk of what's the term? I'm not getting it. It's a leap of faith. Pretty much that's what you need to talk about. So whether they'll be able to convert it or no, it's a bold gamble. Whether time will tell whether it happens or no.
Let's see. Thanks for that, Darshan. Thanks for taking us through that. On to the next story. In fact, a couple of more stories before we dive full tilt on the markets. This was UPL and the conversation there. The government has released the breakup of the exact exposure that individual banks have to the Nirav Modi group. A written submission made by the Finance Ministry in Parliament pegs the total amount to a little more than 7,200 crore rupees. Nikunj joins us now with the details. Nikunj, what is this breakup? What are the numbers looking like?
Right. Firstly, the Minister of State for Finance, Mr. Shiv Pratap Shukla, has informed the Parliament about exposure of various public sector banks to the Nirav Modi group, and obviously Punjab National Bank tops the list with about 6,820 crore worth exposure to the Nirav Modi group, followed by Syndicate Bank and Corporation Bank, which have exposure of 125 and 110 crore rupees respectively. And then there's Oriental Bank of Commerce, which has an exposure of 94 crore rupees, and UCO Bank and Andhra Bank having exposure of 60 crore and 29 crore respectively. And there's United Bank of India, which has about 18 crore worth of exposure. The minister has also informed the Parliament that a red corner notice has been issued against Nirav Modi, and the Ministry of Corporate Affairs is also investigating about 114 companies linked with Mr. Nirav Modi and his uncle Mehul Choksi, both of whom were involved in the Punjab National Bank scam. Over to you.
Okay, very interesting. So, some names, some data out there. Nikunj, thanks for putting that into perspective. Well, banks have been the center point central point of chats after the intercreditor agreement that was signed yesterday. And SBI, of course, clarified that piece to us today as well about how that is one measure. Some names coming out about exposures to the Nirav Modi case as well. I think the state of flux that we've been in, let's see for how long does it last for almost all of these banking names. What else in the markets? I think today, Navneet, if you had to bet on one space as which is looking like the top draw, it has to be cement. The kind of numbers that ACC gave, and we'll talk about it with Nikki in detail, but just that entire pack seems to be zooming in this.
Yeah, it's clearly surprised the trade. I'm sure Nikki will have more to delve on it, but overall, Neeraj, I think if you look at the stocks in the last 6 months, most of the cement companies have corrected, and this is just a bounce back that you're seeing. And the reason was, I think, the input cost pressures in the form of higher pet coke and also diesel prices. The way ACC has been, combating the cost pressures, and they've posted better than expected realizations. Even the adjusted EBITDA was looking pretty good. Let's see if the other companies also can post the same sort of performance.
Yeah, it will be nice to see that. I mean, this pessimism which brought Ambuja down to replacement cost. I mean, you don't get large companies, even though they might not be growing too much, available at replacement cost at about 200 to 205. Even right now, after the 7% rally, is very close to the replacement value that Ambuja would have. But, well, let's wait and watch. It might be too soon to talk about a prolonged rally, because there are concerns about how the overcapacity or capacity additions over the course of the next couple of years is fairly strong, and that might ensure that the capacity utilization levels don't really rise in a dramatic way, and that might put pressure on the stocks too. But for now, for today's session, the stocks seem to be doing okay. All right, we'll try and connect with a couple of other managements too, but it's almost 2:30, so let's get in our technical experts on board to try and figure out how to approach trade in a scenario like this near term. It's expiry week as well. Sacchitanand Uttekar, Deputy Vice President for Technicals Equity he joins us right now from Trade Bulls. In a bit, some of the other guests will also join in. But Sacchitanand, good afternoon. Thanks so much for joining in. How are you approaching trade, Sacchitanand? We just stone's throw away for the all-time highs on the Nifty. The Sensex already nudged that. But it's a quiet day for banks for the last couple of days. How do you approach trade in a scenario like this? What's your Nifty strategy? What's your Nifty bank strategy?
Well, good afternoon, Neeraj. In fact, for Nifty, I think the course is very clear now. 11,080 was the hurdle, and I think the way it has been surpassed right now, I think there's a clear course set towards 11,200, 240. But when it comes to Bank Nifty, if you look at the 30 minutes data, the index has been oscillating within a very narrow range. So on the pattern front, it is forming a symmetrical triangle formation, wherein the bounds on the higher side are placed at around 27,150, and on the lower side, 26,700 has been a very decent support. So that support has been slightly, moved higher, and 26,800, 27,150 is the immediate bound. So if you look at the RSI movement or the corresponding swing lows that it has been forming, the RSI has started moving up, which is a good sign that sooner or later we will see Bank Nifty surpassing this particular hurdle of around 27,150. So what we are expecting is that probably we may see one more drag on the lower side towards 26,900 on the Bank Nifty spot, which should be utilized to create long positions. A stop loss can be placed around 26,730 on a closing basis, and for long positions should be added with an intention of a move towards 27,300 by this particular expiry itself. So we are optimistic overall on the market. Bank Nifty has been in a constrained range, but we don't see any pessimism here. In fact, we are looking for an opportunity to even create long position in Bank Nifty.
Okay, so create long positions in Bank Nifty for expiry is the call coming in from Sacchitanand. But in terms of individual trading ideas for the day, what stocks are you recommending?
Well, two stocks which are in our radar right now is Arvind Limited. If you look at the overall data, the stock has been under consolidation, and the way it has moved, about 420 levels. So what we are expecting is that there could be a possible breakout in motion, and I think this particular move can extend right up to 436 levels. Trading longs can be initiated here. A stop loss can be placed at around 415.30. On the other hand, some of the NBFC names are doing fantastic. In fact, Shriram Transport Finance, the stock had been in a severe downtrend, and the way it has recouped from its recent swing lows, I think there's a good possibility that the stock may head towards the 1300 levels very soon. So from that intention, I think 1250 call option looks very lucrative at this stage. It is placed at around 29, the total premium right now. A stop loss can be placed at around 18, and we are expecting a target somewhere close to 55.
Okay.
All right, so those are a couple of the trading ideas coming in from Sacchitanand, but just shifting focus to a couple of earnings which came a while back, and one of them being Tejas Networks, which reported a strong set of numbers for its first quarter, where the bottom line nearly doubled. Let's discuss the quarter gone by with the Managing Director and CEO of the company, Mr. Sanjay Nayak. Sanjay, hi, good afternoon, and congratulations for the first quarter earnings. The start to FY19 looks like has been pretty good for Tejas Networks. If you could tell us what led to the growth that we've seen on the top line for a company like yours, and how much contribution did we see from the international and from the domestic business?
Yeah, thanks first of all, and pleasure being on. So yes, we did have a pretty strong Q1, and the reason for that is the fundamentals of our business are quite strong in terms of what drives our business. So at a high level, as the data consumption is increasing in India and in the world, there is a need by operators, to build a higher capacity networks, which requires our kind of equipment. So that's kind of the correlation that we have. In terms of our Q1 business, a significantly large contribution was from India. So we already had a lot of backlog of stuff that we had won in the previous quarter, which got shipped out partly in this quarter. And so India really was a large portion of our revenues. On the international side, while we did not have a very large contribution, but the investments we've been making in terms of entering new markets are starting to pay back. And we did report that we had 7 new customer wins. And we being in a B2B business with operators being our customers, I think it's a pretty significant number of wins that we've had. So going forward, I would say that the international will contribute a lot more, but in the first quarter, India was the dominant part.
Sanjay, if you could talk to us a bit on your order book, where are you getting these orders? I think in the first quarter you've got some 7 new orders that the company has received. What's the outlook going ahead? And if you can tell us which are the other countries that you're tapping to get new orders?
Yeah. So let me again break it into the orders from India and orders internationally. So within India, I think we have 2 parts of the business. So the orders from the government-led accounts like, BharatNet or PGCIL or RailTel and BSNL, that is very, very strong. We already won a lot of tenders for which orders are in our hand. And there's a lot more stuff where we are L1, so those orders should come, which are part of BharatNet Phase 2 and others. So I think that part of the business for the year already seems under a pretty good visibility for significant growth. The private accounts in India, where we are in all the major operators, we are getting a reasonable amount of business, but we are at an advanced stage of discussions on certain applications, for example, fiber to the home that some of the people are launching, which can again give a lot more boost in terms of the revenues within India in the private sector. Internationally, there are 3 geographies where we have a focus. Number one is, I would say, Africa is doing quite well. About a year back when we had gone IPO, we just had 1 sales office in Africa. Now we have 4 in the 4 different corners of Africa. So Africa, we think, is growing very significantly and should have a huge growth. Southeast Asia is the second geography where we are seeing a lot of traction in countries like Vietnam, Bangladesh, Sri Lanka, where we have a lot of deals which are in the pipeline and are already cooked. Third geography we're focusing is on Americas, which is Mexico plus USA. Again, we announced a few wins in Mexico as well as US, and US is, by the way, a new entry for us, which we just started last year. So I would say all the three geographies seem to be contributing quite a bit. I would suggest that Africa and Southeast Asia would be the one which will drive a lot of growth this year. US is more on a business development mode where we will get reasonable revenues, but a larger chunk of revenue should be next year.
Just looking at your numbers, Sanjay, the finance cost for the quarter is almost 3.5 crore. It's definitely gone down if I look at it on year-on-year basis, but sequentially it's doubled. Any reason for the same?
Nothing in particular. I would say that our working capital went up by 4 or 5 days compared to the end of last quarter. So it just could be that we have a certain amount of things that we would have, on the working capital, which just got paid a little bit late or is going to get paid this quarter. But I would say materially from a working capital, as such, I mean, we're a debt-free company from a long-term borrowing. In the short term, we use working capital. Directionally, from about a year back, we've brought down the working capital from, around 178 days to around 145 days right now. We think 130 to 140 days is where we should be. So that is the amount of thing which will be in a financing charge on a steady state basis. So there could be a little bit of a spike in one of the quarters here and there, but nothing of a material kind.
So everything was related to the working capital there. Just a last question from my side. How confident, Sanjay, are you looking to maintain the run rate that we've seen in the first quarter? You've already done 30% of the revenues that were seen throughout FY18. If I look at the EPS for the quarter, it's already 4.9 versus full year EPS that one saw last year of almost 12.4.
So clearly, we do have a very strong momentum to our business because, as I said, the medium-term outlook because of the data growth is very strong. We've had a fairly profitable Q1 because of, our margins were very good in this quarter. So on an overall basis, we do believe that 14 to 15% profit after tax is what we should be able to get by the time we end of the year. Clearly, we will see a lot of growth this year. Our long-term target of growth was about 20%, but this year will be higher than that because we have a lot of stuff that got pushed out from last year. So this year, I would say, we have had a strong momentum. While the profitability at this Q1 was 19%, so I don't think we're going to maintain a 19% for the whole year, but around 14-15% for sure we will be able to do. But overall, I think the revenue momentum is strong. The deal pipeline looks good. So we think we should have a pretty strong year.
All right, Sanjay, we'll leave it at that note. All the best to you for the subsequent quarters and for the entire fiscal year.
Perfect, and thank you.
Thanks. Well, that's the management of Tejas Network. Some positive commentary coming by. The numbers look pretty strong for the first quarter, hence the reaction that you're seeing even on the stock price. And they've posted pretty good EPS for the first quarter of nearly 5 rupees versus about 12 to 13, which one had seen in throughout FY18. They've categorically said they look to maintain their bottom line growth of about 14 to 15% for the remainder of the year. Let's see how that pans out. But shifting back to technicals, we've got Amar Singh, Head Advisory at Angel Broking, who joins us on the show. Hi, Amar. Good afternoon, and thanks for being patient with us. What's the call on Nifty or on Bank Nifty? Are you taking any fresh trades at the current levels?
Not at the current levels, but yes, I would say among the Nifty and Bank Nifty, if you look at it technically, Nifty is anytime stronger than Bank Nifty, and that is also reflected in the short-term chart. So seeing that perspective, I would say any pullback in Nifty towards 11,070, 11,080, that would be a good level to buy because the trend being positive and the current level really doesn't warrant the risk-reward ratio. So any pullback towards 11,070, 11,080, because that's a crucial support zone, can be used as a buying opportunity with a stop loss of 11,028 and target of 11,170 on the upside. As far as Bank Nifty is concerned, what we are witnessing in Bank Nifty is that on the daily charts also Bank Nifty isn't very strong. So the rally which is in Bank Nifty, if you look at Bank Nifty somewhere around 27,000 160, 180. That's a very strong resistance zone. Earlier also, it had touched that level and then it has given those gains. So it is in some consolidation. But yes, on the downside, we see that there is creeping upside support for Bank Nifty towards 26,650, 26,700. So that clearly reflects that Bank Nifty is tied in a range, 26,000, I would say 26,600, 700 on the downside, and 27,100 to 200 on the upside. So it's a range which it is trading, but technically I would say Nifty is stronger on the short-term charts as compared to Bank Nifty.
Okay, and Amar, your stock ideas?
Yeah, as far as stock ideas is concerned, the first is Z Entertainment. What we are seeing in Z is that this stock did witness some significant sell-off, and then from almost 505 levels, the stock has bounced back. Technically, the stock is finding very strong support, and the stock being in oversold territory, there is a possibility of a further bounce back in the stock. So the stock can be accumulated around 523.25 levels with a stop loss of 513 and a target of 544 on the upside. And the second stock to look at is India Bulls Finance. What we are seeing here is that in India Bulls Finance, we are seeing that the stock is trading positive. If I look at it from a short-term perspective also, so the stock has been extremely strong on the short-term charts, and it did form a double bottom somewhere around 1100 odd levels. And so it is currently trading around 1260. So this is one stock one can look at. Ideally, the level to enter is around 1230, 1235 with a stop loss of 1214 on the downside and a target of 1275 on the upside.
Okay. Stay on, gentlemen. So much more to talk about. Gurmeet Chadha, co-founder and chief executive officer at Complete Circle Consultants, also joins us on the show. Gurmeet, as always, very good having you. Thanks so much for taking the time out. We'll talk about some of the big movers in moments from now, but can't not talk about what's happening to the commodity space and particularly metal. Let's start off with them. Seem to have found some favor in the recent past, as have the mid caps. Is it a case of people looking to buy beaten down pockets where valuations are looking slightly reasonable?
Yeah, Neeraj, exactly. I think, and that's what right now the dilemma with most portfolio managers is that what is looking good is very, very expensive. And if you are looking at valuation, near-term returns, obviously valuation will play a very, very big role. But I think, and that's the dilemma one has to avoid. We have to focus back on the process and not the price outcome. And this is what we have been telling clients. So, a lot of the movements in metals and some of these, mid caps and small caps, I think some of the excesses, have gone off. But I still think there is still some way to go before we find a valuation comfort. While few ideas are looking good, you were covering UPL, you were covering a lot of other ideas while I was tuned in. So while there are ideas, but I would still say that we are about maybe a couple of months away where we get the bottom. So this value trap has to be backed by fundamentals. Otherwise, it would be more a case of the dead cat bounce.
Interesting. Today's mid-cap end of the market is punctuated by gains to the quality and to the beaten down names. So while you have L&T Tech, you have VIP, you have ACC doing well, look at the list of the other gainers, the top gainers today. Texmaco Rail, 19%, Hindustan Construction, 14%, Suzlon Energy, 13%, Sri Renuka Sugars, 12%, Jindal Saw, about 10%, Bajaj Hindustan, 10%. Beaten down names making a big comeback. Kitex Garment is up about 10%. So it's a bipolar market of sorts in the session today, especially at the broader end of the spectrum. But speaking of ACC, cement seems to have done really, really well for itself. Gurmeet, any thoughts here? This ACC numbers.
So Neeraj, interestingly, started my career with ACC Cement as a management trainee. So I think the concern on ACC was, the plants being relatively old, their per ton utilization levels being lower than the likes of a Shree and Ultratech, and even the utilization levels were a little. That's why it was a relative underperformer, I would say, when you compare it to some of the others. But I think with the numbers which have come in, the utilization levels have gone up. Also, ACC is a pan-India play. It has a very good mix of this OPC, PPC, and RMC. So just for viewers, OPC is your ordinary portland, which goes into larger infra construction play. PPC is where your the ash and the other things come in, which is Pozzolana, Portland cement, and RMC is the ready-mix concrete, which we see for a lot of quick construction work. So I think they have a good product mix. And after some time, I'm seeing the utilization level being in almost 90%, and also the realizations hitting about 4,100, 4,200 rupees kind of a ton. And if cement demand can be 7-8% this year, a lot of these good names like ACC, Ultratech, Shree, could be a good addition from a 2-3 year perspective.
In fact, they've been on a tear today, as we said, led by ACC, which has posted its sharpest move in a really long time. In fact, since 9 years. And realizations possibly came as a positive surprise. Valuations probably a role to play as well. Gurmeet just gave his view. Nikki's spoken to a lot of dealers, scanned a lot of reports, and he's here to tell us what are the key takeaways. Nikki.
Sure, I'm going to start off with a valuation picture for most of these players. Now, if you look at the 10 cement companies that we have picked up, the TTM EV to EBITDA, that's the last 12 months EV to EBITDA, is trading below the 5-year average EV to EBITDA for most of these companies. In fact, 6 out of 10 companies are trading at a discount as compared to your historical average. The only exception to this is Ultratech, some south-based companies, and Shree Cement. Now, do bear in mind the fact that Ultratech and Shree Cement both are embarking upon a capacity expansion plan, while south-based cement companies are ramping up their capacity utilization level. If you look at the share price performance for all these companies, they're not trading far off from that 52-week low level. All of them have fetched a negative return on yearly basis. However, the only exception to this rule is Ultratech Cement, which has managed to gain 4% yearly basis. But if you look at the return potential for most of these players, they stand currently positive for most of them. Third point that I'd like to highlight is the capacity expansion, which currently seems to be playing out only in the major chunk of it will actually play out in H1 FY21, where we are expecting a capacity of 25 MTPA, though we are expecting a capacity of 17 MTPA in H1 FY19 and H2 FY19, but then that's going to be divided in the two bits of it. The last point, or maybe the second last point that I'd like to highlight would be the underperformance of a good result coming in from the underperformer ACC. That's clearly which has gone down well for all the cement stocks. We've seen a beat on all the counters for from ACC, which clearly goes down well for most of the cement stock. And also, if you look at the positive commentary coming in from the industry leaders, Ultratech Cement says that the industry is expected to witness improving trends in EBITDA per ton on favorable demand growth, whereas ACC feels, it's mentioned in the press release, that though cost pressures remain for the industry, but it will continue to focus on operating efficiency.
Okay, Nikki, thanks a lot for bringing all those takeaways that you've gathered from the dealers as well as a lot of the analyst reports which have come post ACC's numbers. Gurmeet, before I shift focus from the cement space, which is in focus, what's your top pick in the sector?
Navneet, hi. My top picks are Ultratech and Shree. Reason being, Ultratech we discussed the other day with the acquisition of Century, which is the cost has been as good as a greenfield expansion. Shree, I think, has been, my sense is this year could hit more than 90% utilization levels. We are seeing the north market, which is where it is basically concentrated, a small increase in the price per bag as well. It also has, so cement, the power and fuel efficiency and logistics play a very, very big role in your landing cost. And more you are closer to the, more you are spread out in a certain region, and more you can cut down, it really adds to your bottom line. So Shree, for example, has 600 megawatts of the in-house power capacity. They also have about almost 100 megawatts of heat recovery and waste management plant. So it gives them a lot of power and fuel efficiency. And also on the logistics there, the efficiency in which the bag moves to the last point also has a differentiated advantage. So Ultratech and Shree for me in the cement bag.
Okay, Ultratech and Shree Cement. Very quickly, Sacchitanand, I know a lot of the cement counters have bounced back in today's session, but looking at the charts, if you were to pick one stock to take a call on, which one would that be? Sacchitanand, if you could hear me, that question was for you. A lot of cement counters have bounced back today. If you were to take a call on one stock, which one would that be?
Well, if you look at the broader trend, I think ACC still looks better. But from a very short-term perspective, the stock has already seen a substantial move. In fact, we are of the opinion that 1500, 1510 could act as an immediate resistance for the stock. So, from a longer perspective, I think, ACC still remains the best of the play. But from a shorter perspective, I think it is better to, book your profits somewhere close to 1500 and stay put again on this particular counter. On the lower side, in case if the stock, gives a decline towards its 1300, 1350, that will be a very good zone wherein long-term positions from a longer-term perspective should be initiated. But as of now, I would not like to venture into any of these cement space.
Okay, that's the technical view coming in on ACC, which is up almost 12% in trade. Well, talking about the other earnings, post-market as yesterday, we had United Spirits also coming out with its numbers. Gurmeet, coming to you on this one, I remember a few quarters back, the company managed to post stellar set of numbers. Suddenly, the sentiment around the liquor companies had changed, and we were seeing a lot of buying activity. But if I look at United Spirits now, it's down almost 14 to 15%, at least for the month of July. Looking at the numbers, the margins came under pressure. It was a miss because of higher ad expenses and also some sort of restructuring cost. But going ahead, there are some challenges. Market share has to go up, normalizing ad spends. But looking at the valuations, Gurmeet, let's not forget, it is trading somewhere about 40 to 42 times one-year forward earnings. Even at these levels, what would you do with something like United Spirits?
Yeah, the Singh stocks obviously will have a bit of a premium as far as the valuation goes, and I think where the street got a little worried was on the popular segment where they saw a flattish to some kind of decline in volume. I think they are trying to reorient, and I was hearing management commentary. But however, the prestige, which is the high-end range, is where they saw about 19% kind of a volume growth. So I think the reason for, I would have a near-term caution on it for the being that we are also getting into state elections this year. And there have been on and off talks of few states, coming up with a liquor ban. And as you rightly pointed out, 40 plus P doesn't give you that margin of safety as well. So a near-term caution on liquor stocks as a pack, and the operating performance being relatively weak one quarter obviously led to some correction. So near-term caution in them, and then maybe once we are done with the political events, then probably we can. In fact, if you want to really look at this phase, which is the Sin packs you called, I think gaming and something like a Delta Corp could be a better ad, because you have a new gaming policy which the Goa government will come up with, and the numbers have been very good. The online gaming is growing at a healthy 18-20%. So if you want to really go in that pack, the better bet is Delta.
Very interesting. 4% higher today after a 6% move. By the way, the one that is making a real strong move is Grasim, 8% higher now. I can't take my eyes away what's happening to cement. I know we've discussed that pack enough now, but just the quantum of the move that is coming in is quite handsome. While we talk about all the gainers, Gurmeet, one last question to you is about what's happening to the premium plays which are just losing out. Look at the top 4 losers today, and all of them are those premium expensive valuation names just taking a bit of a breather. So it's Kotak Bank down 2%, Finserv and Finance down about 1.5%, and HUL down about 1.25%. If you had to add on to one of these names, Gurmeet, which one would it be, and at what valuations would you be comfortable adding that name? Because the simple answer is that 5 years out, all of these names will be much higher than where they are right now. So you don't have to look at the levels right now, and that might well be the right answer. But for somebody who's looking for a tactically correct opportunity.
See, 2 names I think, Neeraj, I would like to have. One is Kotak. I think both Kotak and HDFC took the MTM hit rather than taking that 6-month window where RBI gave the leeway to spread your MTM losses on the bond portfolio. So as I said, the process and the operating metrics are more important. So I saw the loan book growing 22%. I didn't see any issue on the NII despite rising yields. So the NPAs were nothing to be alarmed about. So, and the fact that it has corrected from almost 10-12% now, something like so Kotak could be a good add and by near term I mean more like 12-18 months. HUL, I think it's one of the great ways to play the rural consumption and recovery in rural spending. So I would go with it. I come from a distribution background where my family is into distribution of FMCG products, and we are largely in rural areas, and I'm seeing a strong volume growth. I mean, we are seeing this consumer upgrading, which I've been talking about. People are moving up the brand hierarchy. A lot of movement is happening from unbranded to branded, within branded from one price point to a higher price point. So I'll be very, very positive on HUL, both from a near-term and a long-term perspective.
Okay, slightly patchy in the session today, but otherwise no causes for concern, I would guess. We've taken Gurmeet's ideas, I'm guessing.
I think his main fundamental pick is still pending. Gurmeet, I think PI Industries is something you've chosen for the day?
Yeah.
What's the rationale?
So PI, as I said, is one of the, it has largely two businesses, one is agriculture inputs, which is largely your agrochemicals, your specialty fertilizers, your hybrid seeds and all. I think the industry is seeing a volume growth of 11-12%, and I think PI will do, obviously better than industry because of the licensing arrangement it has and the strong distribution pipeline it has. The other business which is really picked up and added both to volume and margin is the custom synthesis and manufacturing. They have some excellent tie-up, in Europe and Japan on certain specialty chemicals. They also have, the capex is behind, so the next 2 years can see almost more than 6 billion free cash flows. Also the margins, if you see in last 4 years, it has gone up from about 15-16% to almost 24%. And so again, coming back to the focus on agriculture, which even the government has, I think it's a very good play, on the agrochemical and custom synthesis space.
Okay, Gurmeet, always a pleasure having you. Thank you so much for taking the time out and joining us, and well, have a good Tuesday.
Thank you.
Before we slip into the break, keep in mind 11141, about 30 points away from all-time highs for the Nifty as well. So keep that at the back of your mind. And before we slip into this break, here are Manish Sonthalia of Motilal Oswal AMC on why he still believes in buying quality stocks at a small premium and whether cement stocks are set for a re-rating.
One wants to invest for the next 2-3 years, then if buying the large caps even at these prices may not matter so much, because at the end of 3 years, if you buy 5% or 7% higher or lower, it doesn't really move the needle as far as the overall returns over a 3-year time frame is concerned. But my sense is that these names may go through time corrections, and the time correction could be around 3 to 6 months. And so if somebody wants to time it to perfection, maybe the margin of safety is better in mid and the small cap as opposed to the large caps.
If you heard Manish Sonthalia on Alpha Moguls about 4 or 5 months ago, you would have seen his thesis on some of these names like HUL. And I think it's turned out really, really well. Manish, interesting thesis out there on mid-caps. You reckon this is a really good time to build a solid mid-cap portfolio, because in part there has been correction which has been fairly steep due to a lot of other factors than fundamentals. And part 2 of my question is, for the ultra HNI who's looking to park money into PMS schemes, is this a good time to pick up schemes which are focused largely at the mid-cap and the small-cap end of the market?
Yeah, the answer is unequivocal yes. The space to be in is in the mid and the small caps if you want alpha as well as absolute returns over a 2 to 3 year time frame. Yes, the mid and the small caps have seen some very deep cuts. More than, my sense is it's more than what is warranted. And so there's absolute real value in some of these names out there, because the business environment is only turning for the better. The earnings, ultimately what matters is earnings growth, and earnings growth we are starting to see come back in a big way. Of course, the base effect of last year is also to do with the positive percentage YOY returns that we are seeing in many of these names. But markets are all about YOY returns. It's all about year on year, what is the earnings growth. They hardly differentiate what's the base effect and so on and so forth. So on that front, I think these technical factors do present a great opportunity to build a mid and a small cap portfolio, provided the time horizon is slightly longer at around 2 to 3 years. I mean, many of these over that, many of these names over that time frame may not see the current prices that we are in today. These prices have come through due to technical factors, the capital gains tax introduced or the regulatory changes, etc. But that is how tops and bottoms are made in markets, and these opportunities are to be capitalized upon and not ignored.
Cecilia, a mid-cap opportunity, Manish, but cement is a red-hot pack in trade today, in part due to what ACC has shown in realizations. A depressed space, maybe because earnings have got pushed a little bit more into the future than what people had thought earlier. What is your thesis here?
Yeah, so the commentary that came out of the Ultratech management as well as the ACC numbers have surprised the analysts, the sell-side analysts big time. And most of the street is basically very pessimistic on the cement names, primarily due to the fact that there's got a lot of capacity that is coming through, and capacity utilization, etc. is still a worry, and so on and so forth. And the correction in many of the names have been very severe, I mean, not warranted, so to speak. Of course, the monsoon has a part to play to it. Monsoons have been pretty decent, and realizations, if they hold post monsoons, and my sense is going to hold, and with benign input costs, I mean, the profitability is only going to move up, and with the increase in profitability, you should also see a re-rating on many of the cement names. Again, out here, I think there's larger value in the mid and the small caps as opposed to the large caps.
Manish, since you are talking about finding value in the small caps or the mid caps for that matter, I'm going to leave aside names like Bajaj Finance, Bajaj Finserv, possibly HDFC aside. I'm looking at the Bloomberg consensus, and it's indicating a lot of upside for some of the relatively smaller NBFCs. What is your approach to this entire sector? Would you recommend sticking with the big names, or in this case, would you actually try and perhaps start nibbling into some of the relatively smaller ones?
So within, if you leave aside the large names in the NBFC space and look at the mid and the small caps, I think there's a lot of value and earnings growth that is still to come in the MFI space over the next 2-3 years. I mean, if you have seen some correction in these names, they present an opportunity. Or if you're looking at, let's say, mortgage financiers, there's not too much of value and not too much of spreads left in the, salaried mortgage finance loans, salaried class. But if these guys are actually funding self-employed clients who are in the self-employed category, and if you're funding them in tier 2, tier 3, tier 4, I mean, the spreads are very, very decent. We have ROAs in excess of 2.5 to 3%. And if you apply adequate leverage of 6 to 7 times, then a decent 15% ROE, and some very superlative growth still to come. This is not a very crowded space as opposed to the mortgage financiers who are catering to the salaried class, where there's cutthroat competition from banks, and the cost of funds are actually also rising. So it makes much more sense to be in mortgage finance space, catering to the tier 3, tier 4, tier 5 sort of client geographies, and the clientele base is more self-employed than salaried.
Family businesses get a bad rap. Traditionally, they were looked down upon for getting rich any which way possible. Today, they're still looked down upon, but for very different reasons. For not being modern, for being too traditional and not being agile enough. I think it's easy to forget that the Tatas, the Birlas, the Ambanis, the Hindujas started off as humble family businesses. It's the way India has always done business, and it's the same all over the world. Walmart was a kirane ki dukaan once. I'm Sonu Bhasin. I've served as top management and as advisor to top management. I believe I have learned what keeps a good business ticking. Join me in a conversation with the stalwarts of the Indian family businesses, of building a business legacy that spans across generations. The Inheritors, an exclusive event by Bloomberg Quint.
catching up on news feels like a test match. Want the highlights? We hear you.
It's an ocean of news out there. Need a navigator? We hear you.
Do you have analysis paralysis? A case of too much information and not enough time? Do you wish someone would just pick the most relevant topics and tell you what you need to know? We hear you.
Good morning. You're watching Bloomberg Quint. This is First Word.
Curated and presented by Bloomberg Quint's senior-most editors. Weekdays at 8 a.m.
Welcome back. Just 24 minutes to go for markets to close, and Nifty is right now at 11,130. Remember, Bank Nifty is the one which has been facing some bit of pressure in today's session. It has once again slipped below the mark of 27,000. Let's just pull up the European market indices as well and check what's happening there. Wow, that's a very, very strong move for all the three key indices there. DAX up almost 1.5%, CAC up 1% in trade, and FTSE 100 is up almost 61 points in today's trading session. Well, a lot of stocks back home definitely are moving around. I just want to pull up Jai Maruti before I go across to Yash to find out his fabulous 4 list for today's trade. Jai Maruti has surged in the last 15 to 20 minutes of trade. Remember, Maruti has almost 29% stake in this one. 480 is the level where currently Jai Maruti trades. But moving back to Fab 4 stocks of the day, let's go across to Yash to find out what's he tracking. Hi Yash, good afternoon.
Good afternoon, Navneet. So the first stock on my list is L&T Technologies, and this one's up as much as 12% today after reporting a good set of numbers. Their revenues have grown by 40% to 1,152 crore rupees. Their net profit has almost doubled to 198 crores, while their margins, they have expanded by nearly 200 basis points. So all in all, a good set of numbers, and the stock is reacting positively to it. We are also tracking ISMO. Now this one's up about 9% after the company said that it has received a multi-crore order from a leading OEM in Mexico for its car visualizer product. They do not disclose the value of the order, but we spoke with the management to get an understanding of it, and they say that it is a significant order given the size of the company. Idea Cellular had jumped as much as 18% today on the back of reports that Idea and Vodafone India both have jointly made payments to the tune of 7,200 crores to the Department of Telecom. Now, with the clearance of its financial dues, it takes a step closer towards its proposed merger with Vodafone India to create the largest telecom operator in the country. And also, we are looking at India Cements. The entire cement pack is buzzing in trade today. This one's up about 10% after ACC reported a good set of numbers. Back to you.
Okay, thanks a lot for that. Yes, cement is right up there in the list of gainers. What's also gained today, by the way, and gained really well, is NIT Technologies. That one is up about 7.5% at 1212. That's trading at fresh highs for itself. Amar, on the charts, NIT Technologies?
Yeah, looking at NIT Technologies, definitely it's, I would say from a long-term perspective, the stock is strong. However, if I look at the daily charts, the stock was in consolidation, and if you look at the levels, so somewhere around, if you look at it, 1170, 1180, that was acting as a resistance, so that has been taken out. So we'll have to watch out whether the rally that we are witnessing today does it sustain or not, because it could happen that today's high, if it's not breached, then we could see some profit booking or selling coming into it. But overall, the trend, the long-term trend definitely remains positive, but the short-term trend as well as the intermediate-term trend clearly reflect that we'll have to watch out whether the level that has been breached today, I would say anywhere between 1180, 1190, consistently sustaining above that is going to be very important and crucial for any further upside to this stock.
Okay, that's an IT tech for you. I think the futures too have seen a lot of open interest build up. This is one counter which has been where we've seen a lot of long positions being created at least since the last 2 to 3 months. A 22% higher just for the July futures. Remember, they expire on Thursday itself. Let's bring in our next expert on board. We're joined by Nipun Mehta, who joins us right now. Hi Nipun, good afternoon and thanks a lot for joining us. Let me start off with some earnings which are lined up for tomorrow, and the biggie is L&T. Ahead of the earnings today, we've seen some bit of traction in the stock price that's been trading higher. Well, looking at the poll as well, we're expecting a bit of margin expansion from L&T and the guidance which they have given for FY19 revenue growth at 12 to 15%. Any major expectations with regard to L&T from your side? The numbers are due to come out tomorrow.
Well, for one, I think L&T management last quarter did give a fairly positive indication of how FY19 would pan out. Our sense is execution has been better. Order flow also continues to be as healthy. So very clearly, margins is something that just could be relatively stable in comparison to what we've seen for some of the other companies. So overall, I think the top line growth is there, and we could see a better FY19 in comparison to FY18, both for L&T and for a lot of other companies in this segment and this space.
Interesting. Well, that's one. Which will come out with numbers. We'll also have the likes of ITC, RIL and a few others come out with numbers. The ones that have come out with numbers, of course, in today's session have somehow have to be the cement names which have done really well. Nipun, anything that you've heard when it comes to these beaten down names picking up? One, the Adani Group stocks, of course, are in a league of their own, but today there is traction in the railway companies, there's traction in sugar. Is it more a case of a dead cat bounce that is happening in for pockets which the market was largely ignoring?
So Neeraj, if you see overall market movement today, there has been a fair amount of bounce as far as mid caps and small caps are concerned. Well, it's a case of some of the good companies declaring good results and the rest of them also having a good day in terms of some speculative activity or the other. So our sense is, yes, probably for a lot of them, it's a dead cat bounce. It's purely sentiment which is picking them up. One definitely needs to be choosy in terms of which small caps and mid caps are likely to rally. Some of the initial results that have come in for some of these companies have been fairly encouraging. Again, also the management commentary for some of them has been encouraging. So yes, there is expected to be that decent bounce as far as mid caps and small caps are concerned, but very clearly fairly selective is something that one needs to be.
Okay, looks like it is a dead cat bounce for most of these stocks in the broader markets which have surged. Texmaco Rail now locked in upper circuit with gains of 20%. Well, Asian Paints will be coming out with the numbers in a while today. The stock has hit its life highs ahead of the numbers. It's cooled off a bit, however, it is trading with gains of 2 to 2.5%. Sacchitanand on the charts at current levels, the numbers will come any time now. What's the how are the charts looking? What's the resistance on the upside for this one?
Well, the stock is at its life high, so definitely there's no resistance as of now. And if you look at the pattern itself, the pattern had concluded a target somewhere close to 1470, and this is where exactly the stock is quoting. So I would prefer, in case if someone is holding the stock from the results perspective, I think it's better to keep a trailing stop loss somewhere close to 1440 and monitor how this particular stock performs from here on. But from pattern perspective, most of the targets have been achieved. The trend has been very strong, and momentum for the last 15 days has been stronger. So I think relatively, the stock could inch forward, but it's better to keep a trailing stop loss of 1440 and no fresh long positions should be added.
Okay. In moments from now, we'll get in what dealing rooms are recommending in the session today as well. Darshan should be joining us any moment. What else has done very well is Whirlpool, up 7.5%. There is strength in Astral Poly today, up about 1.5%. So good going out there as well. There was some strength in Bata during the early half of trade and Havells, but both of them have cooled off. Nipun, post this GST ruling change, are you enthused enough to go out and buy any of the consumer durables?
Sure, I think consumer durables have been a favored space for close to 3 to 4 quarters now. And while there has been a significant run-up, yes, the universe of mid-sized companies, mid-cap companies which have done well or which are expected to do well is not very large, and which is the reason where you're likely to see some of these companies at stretched valuations. But our sense is, yes, given the kind of visibility of growth that is there, visibility of earnings that is there over the next maybe 4 to 8 quarters, this is one space which will continue to attract fair amount of investor attention. And across, whether it is plain white goods companies which are likely to benefit out of the GST reduction, and or the overall consumption space which is there, which could benefit out of the rural spend that is there. So yes, clearly, despite the valuations, definitely a space one should try and be in.
Okay, Nipun, stay on. So much more to talk about. It's that time of the show when we take a look at what dealing rooms are recommending in the session today. Darshan is here with his channel checks. Darshan, good afternoon. What are you learning?
Yeah, so one of the stocks that's been spoken about is ICICI Bank. We're in the midst of earnings season. It's down in trade, but dealers anticipate that this time around ICICI should post a decent set of numbers. Some of the HNIs are accumulating the counter. Remember, the results are there on this Friday. So ICICI Bank is something that's been spoken about. The second stock that's been spoken about is Alchem Labs. It's up almost 8% in trade today, almost 9%. They've received the EIR for the Daman plant. It's extremely positive news. They had 13 observations in the Form 483, and that has been cleared. And you know, majority of it's their largest facility. Majority of the filings that they've done is from this plant. So certainly a big boost coming in for Alchem Labs at this point of time. It's up almost 9% now. And finally, the last stock that dealers are talking about is Kajaria Ceramics. Came out with numbers. If you go to the press release, the management commentary was rather strong. They believe that the worst is over in terms of the input cost, in terms of demand that was getting demand that was not coming. So they believe that outlook that the management gave was rather promising. But Kajaria is trading almost near 52-week low. But nevertheless, dealers indicate that there have been positions taken, seeing the strong numbers, seeing the strong commentary. The numbers were okay, numbers were slightly weak, but the commentary was rather strong from the management.
Okay, Darshan, thanks a lot for bringing that dealing room check. Well, the other stock which will be in focus, at least for tomorrow's session, will be Jubilant FoodWorks, which is trading weak in today's session. Remember, the earnings for this one come out tomorrow. And look at that sharp reaction that you've seen in the last 5 to 10 minutes of trade. The numbers will be coming out tomorrow, and the stock was actually weak yesterday. But remember, last Friday it had touched all-time high levels when it was up almost 4 to 4.5%. Sacchitanand, on the charts, the recovery that we are seeing for Jubilant FoodWorks in the intraday session, any levels to keep an eye on, considering the numbers come out tomorrow?
I think 1400 would be a critical level. In fact, from a support perspective, if this particular level is breached, then probably we may see some unwinding pressure in the counter, and we may see a correction right up to say 1350 kind of a level. But as of now, I think the stock has been trending well. On the higher side, 1500, 1510 is the immediate resistance. So it will be very critical how this particular stock moves within this particular band in tomorrow's trading session when the numbers come out. So in case if the band is breached, then probably we may expect a very strong move on either side of this particular range.
Okay, let's keep an eye on Jubilant FoodWorks. It has recovered in the last 15 to 20 minutes of trade. Let's see how the same-store sales grow. That's going to be in focus when the earnings come out tomorrow. Nipun, so far, the numbers which have come by, anything which has surprised you, either from the large caps or from the mid caps?
Well, to start with, yes, probably the cement numbers yesterday surprised a bit. The overall trend hasn't been too great as far as cement companies are concerned. Volumes have been better, but clearly pricing power is clearly missing. Costs have been higher, which has ensured that margins are under pressure. There are very selective pockets where the volumes are sustaining themselves, and or to a degree there is pricing power. So yes, probably there's still a couple of more quarters of evidence required in terms of whether margins could expand or whether these kind of volumes could sustain. Overall, the space looks good, but probably in the short term, till the pricing power is missing, that's one space that, and in terms of results, was a surprise. The two-wheeler announcement that came about, or the trend in the two-wheeler segment in terms of the change in pricing, is something which was again a fair bit of surprise. Overall, our sense is that the industry would want to take benefit of much higher spending that's coming about in the auto space, two-wheelers and four-wheelers, and would want to take benefit of in terms of higher volumes in comparison to margins. So yes, these two were to a degree surprising. I think the third observation could possibly be that the banking space seems to be showing some signs of lower provisioning that is there. There was no major surprise that came about in terms of the PSU bank or the overall banking space, whatever results that have come out. And as long as the provisioning is steady and or recoveries are gradually improving, our sense is that's a positive sign that could be there. So to a degree, that was more of an observation than a surprise, but really positive to that extent.
By the way, all the Adani Group stocks seem to be doing rather well for themselves. Adani Transmission now is up from the levels that it was at, about 7.5% higher at 180 or 181, up about 12%. So that is doing very well. Adani Ports is up about 2.5 to 3%, so good going there. By the way, KRBL numbers are out there, and 24.5% margins versus 23.3. That is probably giving a bit of a leg up to KRBL. Otherwise, the loss, that's a network 18 number, but KRBL's optical numbers didn't seem all that impressive. But it's a stock that's been beaten down so badly that a margin improvement could probably be leading higher. Look at that, revenues down about 14.5%. But that's not the space. Adani, I was talking with the Adani Group stocks. Even Adani Enterprises has done rather well for itself. Green energy is in a space of its own. I don't quite know really about that business at all, but the Adani Enterprises too, up about 8.5%. Some really strong moves here. Before we get in closing strategies, Amar, this bunch of stocks which are doing so well, you can't really trade Adani Green because it's locked on a circuit. But between Adani Ports, Adani Enterprises, Adani Transmission, I'll leave Adani Power out because that's a difficult one. The other three, is there a trade on any one of them?
Yeah, I would say that Adani Group in particular, the stocks have been really firing. And if you look at Adani Enterprises, it's up almost 80% in the month of July from 100 odd levels. It's around 185, 86. So I would say this is a remarkable rally. And however, if you look at the chart, somewhere on the upside, it has got strong resistance around 195, 198 levels. So those who are on the long side, they ideally should book profits around those levels. Fresh buying, I would definitely not recommend at these levels.
Okay, no fresh buying recommended at current levels. Grasim has crossed the mark of 1,000 rupees in today's session. In fact, I know we've spoken a lot about the cement counters, but just let's get a technical view on this one going. Sacchitanand, on the charts, now 1,000 rupee stock Grasim. What can be the next level here?
I think the next resistance for the stock is somewhere close to 1,015, 1,018 kind of a zone. And from a momentum perspective, I think a trading stop can be deployed at around 994 from here on. But overall, I think the structure is far better in something like ACC from a broader perspective. Grasim still looks like a bounce back, and probably we may see some resistance close to 1,020 kind of a zone.
The stock which has moved higher is GSK Pharma. Let's just pull up that one. That too has touched its 52-week high in today's trade. Obviously, it's come off the highs that we've seen, but it is still sitting with gains of nearly 14%. Amar, on the charts, GSK Pharma, any levels to watch out? Any fresh positions that can be taken?
Yeah, looking at the particular stock, I would say it is in more or less in a consolidation zone. And technically, the stock is trading sideways, so I would say that it's better to avoid the stock right now.
Okay, what about closing strategies? Sacchitanand, to you first, your top closing strategy.
Well, M&M looks promising. In fact, the way it is placed right now, 900 has been a decent base. We have seen this particular base getting shifted. So what we're expecting is that there could be a breakout about 920 levels, and the move can extend right up to 940, 945 levels. A stop loss should be placed at around 906, and long positions should be initiated in M&M.
Okay. And Amar, what about you? Your top closing strategy?
I would say that one can look at JSW Steel. This is one stock which witnessed some sell-off, but overall it's around very crucial support levels and it has bounced back. So any pullback towards 312 levels can be used as a buying opportunity with a stop loss of below 305 and a target of 324 on the upside.
Okay, so those are some of the closing strategies buy on JSW Steel. Nipun, before we let you go, considering Nifty, Sensex already hit its all-time high level. Today, probably Nifty will be closing at its all-time high level. It's not touched the intraday highs that we've seen in the past, but good time to deploy money, or still one should wait it out because the sort of correction that we had seen in the broader markets, that is still reeling with some bit of pressure.
Well, gradual nibbling in is always advisable. In a lot of these beaten down, fundamentally sound mid cap and small cap counters that are there, even some of the larger cap ones where while the focus of the market has been on a few select large cap, a lot of the other large cap stocks have been languishing to an extent. So that could be a focus. One must remember, of course, that being an election year, what happened with GST in terms of reduction of rates is something is as a trend one could see for the next few months, not just in GST, but in terms of other such swaps that could be there, which will ensure that the consumption space overall will get a boost. There could be, again, in terms of the kind of rural spend boost that the government might want to give. That's something that before the elections are announced, that's something that could happen. So overall, our sense is, yes, it's a decent time to start nibbling in or keep nibbling in. We've been suggesting nibbling in for some time now. And that's something which could, over the next few months, help when the market turns around as and when elections are announced.
Okay, Nipun, we'll leave it at that note. Thanks a lot for joining us today and taking us through your thoughts on the markets. Well, 11,133 on Nifty, and probably this will be the all-time high on closing basis. Remember, last time the closing high was 11,130 for Nifty. So good going. Sensex has already touched all-time high, but on closing basis, we'll see a good number for Nifty also. Just few minutes to go from markets to close. Let's head across to Neeraj to find out how exactly today's closing is panning out. And Neeraj, no complaints, clearly, either from benchmarks or from broader markets.
Yeah, I mean, the person who wants to grumble can argue that the Nifty Bank hasn't done well, but Navneet, you are right. No complaints whatsoever. Nudging distance of all-time highs for the Nifty, the Sensex already doing that intraday as well. And the broader markets, really. This morning we were talking about how the mid-caps are at some key levels on multiple chart parameters, and that certainly seems to have played out. 2.5% for the small cap space. And yes, you can argue about the quality of the rally out there, but hey, when the tide is starting to turn, the lightest boats start to come up first, and then the meaty ones would. So good moves really for the mid caps and the small caps in the session today. And Navneet will address that back, but let me just try and talk about what's happened at the large cap end of the market. Grasim, it's all commodities, to be honest. Hindalco, Ultratech Cement, Asian Paints, they're doing very well. Indiabulls Housing Finance up 5%. L&T ahead of its numbers up about 3.5%. It's probably not got to do as much with the expectations on numbers as to do with the fact that the stock really hasn't done too much in the run-up to the markets at all-time highs. Adani Port got a bit of a leg up after that Commerce Ministry statements about the GST, etc. came about. What didn't do well? Some expensive names. So Kotak Mahindra Bank, Bajaj Finance, HUL. Hero MotoCorp continues to grind lower. Bajaj Auto continues to grind lower. So those stocks continue to trade at 52-week lows. And Tech Mahindra and the IT pack had a slightly weak session in trade today. But Navneet, while it is bipolar out here, when the Sensex and Nifty at all-time highs and two-wheelers at all-time lows, the mid-cap end of the market, some very strong moves out there, even though they were two slightly weaker names.
That's right, Neeraj. Hence, I've got more gainers on my list today. So let me start off with the cement pack. ACC gained on back of better than expected numbers. Realizations were better. And the cost control measures which the company took, that made the EBITDA also looked pretty much good. So 13.5% higher. It took the entire pack up with it. India Cements also rallied along alongside ACC. Not only both these stocks, but remember all the cement stocks today were up and about. So 9% higher for India Cements. Adani Group stocks have been surging. We were taking views from our technical experts. Adani Enterprises, today is the 13th straight day when it's gained. It's up almost 80% in just the month of July. It's bounced back very sharply to the lows that we've seen around the mark of 100. NIT Technologies, another mid-cap IT company which has been exhibiting strength in the last few months. We've seen a lot of long positions also coming about. 8% higher for this one. AB Capital today saw good gains of 8%. Probably this is a stock where we get a lot of queries from our viewers as well. So 7% higher here. Real stocks actually surged. So something like Uttekar Wagons, Texmaco, both of them saw good gains. Uttekar Wagons locked in upper circuit with gains of 20%, and Texmaco also locked in upper circuit of 20%. Jai Bharat Maruti, a company in which Maruti has nearly 29% stake, that surged in the last hour of trade. That's the intraday chart that's going to tell you when exactly the surge came about. 14% higher, and also beaten down stocks like PFC that also saw good momentum in today's trade. That was up 8.5%, and closing around the day's high mark is always a good sign. On the losing side, you had Thirumalai Chemicals. That stock saw some bit of selling pressure today, so that's down almost 6% in trade. And also something like DFM Foods, that's down almost 5 to 7%. So not a good day actually for DFM Foods. And also Granules India, that was weak in today's trading session. Granules closing with cuts of 3.5%. Other counters obviously which will be in focus, the numbers will come out in a while, will be Asian Paints. So ahead of that, the stock touched its all-time high levels today.
Well, and we'll get to know what they do. The expectation, of course, maybe X, but the key is, post the GST moves, the paint companies have had a good move. Reasonably good move. I won't say a terrifically good move, but well, that notwithstanding, save for the Nifty Bank, I think the Sensex and the Nifty doing well, but the mid cap and the small cap end of the market, extremely strong show today. And I think that the market breadth should be a lot better than what we saw yesterday. Yesterday was 2:1 in favor of the advances. In today's session, likely that the ratio will be substantially different. This is what we are used to, but as a mirror image, usually the declines are about 1,000, 1,200 and the advances are about 200, 300 in the recent past. Today is a big bang day for the market breadth, and it stayed positive for most part of the trading day. Has not shown even an iota of change, Navneet. Very strong move today by the broader markets.
That's right, Neeraj, and that's a very positive sign, because so far the gains which we were seeing on Nifty were only coming because of few stocks. But now in the broader markets, the entire listed universe, as we can see, market breadth in the last two sessions has been quite positive. Let's also check what was the participation today, considering this is the expiry week. So the F&O turnover has been actually inching higher, but look at the NSE cash, Neeraj. Last week throughout it was somewhere about 27, 28. Yesterday was 31,000 for NSE, and that's gone up almost 35,000. So higher participation is also a good sign, and overall turnover which we've clocked today is 9.1 lakh crore. And let's not forget, today is the record closing for Nifty.
Well, so that all of that really aiding sentiment. The contributors list, I mean, irrelevant to be honest, because you would probably have the Kotak banks on one side. Yeah, Kotak Bank and Reliance and HUL on one side. These are all expensive names just pulling back a bit, but the real story is out there. When was the last time you saw L&T at the top of the pile of the gainers list? Infosys right up there, Indiabulls Housing right up there, and IT had a mixed day today. While might be out there on the other end, while they might not be here in the top list, but the likes of HCL Technologies and Tech Mahindra and the others did correct. So a mixed day of sorts. You'd be happy that we've done well in the session today because of what's happened at the mid cap and the small cap end of the market. Final thoughts from our experts, and Amar, to you first this time. Would your bets, by virtue of what's happened the last couple of days, largely be concentrated around the broader end of the spectrum going ahead? Trading bets, I mean?
Yeah, overall I would say that what is really heartening to see is that if you look at the advance which you were talking about, the advance decline, that's somewhat giving a sense of confidence also. And technically, as I said earlier also, Nifty, that is the broader index, is clearly reflecting stronger gains and strength coming there, apart from a few of these stocks like Kotak and I would say Hindustan Unilever and some of those stocks and Bajaj Auto to include in that group. But overall we are seeing, and also what we are witnessing is that the metal stocks, and even if you look at the commodities, they are somewhat seem to be some sort of support coming in at lower levels, and that's what we are witnessing in the metal stocks as well. So there is a possibility that we could see further upside to the markets, but one needs to definitely trade with caution.
Okay, and clearly today we did see some of the metal stocks going up. Vedanta, Hindalco, all of them were up and about. Sacchitanand, your approach to markets would be what for the remainder of the week? All-time high closing coming in for Nifty, Sensex also touching all-time high levels once again in today's session. Would you recommend continuing with long positions if somebody's already rolled over them?
Well, absolutely, yes. In fact, we have been talking about markets, heading towards a 11,200 kind of a zone. And I think even if you look at the momentum oscillators, they are still not showing any signs of exhaustion or, divergence. So probably, there's still a good amount of headroom which is left. Even if you look at some of the banking counters, they have just started contributing. The Bank Nifty is still stuck in a range, and that particular range could see a breakout on the positive side. So I think overall, if you look at the entire spectrum, it is more or less on the bullish side, and definitely, one should continue to hold on to this particular, bullish bias, and until unless we don't see a firm reversal getting, formed, at least on the immediate time frame, one should continue to be on the long side.
Okay, continue to be on the long side. That's the call coming in. If you look at the technicals on that note, would like to thank both our technical experts, Sacchitanand as well as Amar. Thanks a lot for joining us today and taking us through your technical views on the markets. Well, with that, it's a wrap on this edition of Countdown. Thanks a lot for watching the show. It's goodbye from Neeraj and my side, but stay tuned to Bloomberg Quint for more news and updates.